Welcome back. You're still tuned in to Chartbusters on CNBC TV 18. Well, let's get talking about a couple of companies. Mphasis is the stock in focus. It missed estimates on the revenue front, which dropped 0.4% in the third quarter, making it actually the only IT company so far to report a drop in revenue. However, there were 5 large deal wins, which it won. It is the highest ever till date. Nitin Rakesh, the MD and CEO at Mphasis, joins in to discuss the quarter gone by. Nitin, hi, welcome to the show. If you could just start by talking about the statistic on revenue, where there is a decline which has taken place for Mphasis as compared to your peers.
Thanks for having us. I think the nuance of what's causing the decline is really the important aspect to think about. We are living through an environment where one specific portion of our business, which is mortgage servicing in the US residential market, saw some significant headwinds given the total lockup of that segment of the market over the last couple of quarters, especially in Q3 FY23, contributing to a pretty significant headwind on the revenue in that segment of the market. If you peel that segment away, revenue is actually up both sequentially and 15% on a YOY basis as well. So I think we're living through that duality. Core business on tech, applications, transformation, cloud data continues to do really well. But the headline number is getting clouded by the significant drop that we saw in the mortgage volume business. The volumes are actually down quite dramatically in the last 12 months in that business. Some of it unprecedented and also some of it unexpected.
Okay, all right. We have Manish Dugar as well who joins in. Hi, Nitin. Speaking to you after a while. Well, if you could give us a sense on that front, the mortgage part of it itself. What was the extent of decline in the mortgage business, if you could quantify it? What was mortgage-related revenue in Q3 as a percentage of your total revenues? And does that mean that mortgage stays depressed? If yes, for how long?
Let me first, Nigel, tell you that at this point in time, the total contribution of that to our overall revenue is around 8.8%. So it's already broken the 10% mark. I think it has declined quite significantly in the last 1 quarter. So QOQ decline in the mortgage business has been northwards of 20%. We haven't broken out the exact number because we're trying to make sure that that doesn't just become the only narrative. Having said that, I think just to give you some more color, there are 3 segments in that business that we operate in. Originations, which is both new purchases as well as refinance. That segment of the business is down 80% year over year. But on the other hand, we also had a counter-cyclical home equity loan business, servicing of the home equity loans that our buyers tap into as the real estate prices give them equity in their homes. That business has actually doubled in the last 1 year in the same period, and that gave us a lot of cushion at the overall number headline basis in the mortgage business. And the third line is servicing. We're starting to see some green shoots that on the servicing side, as delinquencies go up and loans start changing hands from weaker players to stronger players on the MSR holders, then I think we will see a lot of opportunity come up there as well. So I think, firstly, the overall headline number, mid to high single digits, no longer a very large portion of the revenue. So we've probably taken the brunt of that decline, hit in Q3. Secondly, I think there are some green shoots in the servicing side that might actually fructify before the interest rate cycle turns. And of course, as the cycle turns, this will become a tailwind for us.
Okay. So Manish, let's get you in and talk a little bit more about the entire mortgage outlook. We could probably expect another rate hike from the Fed come, the month of Feb, and that could probably be the last, and there could be a pause going forward. From that context, what can you guide us when it comes to the mortgage segment in 2023?
It's hard to pinpoint when that happens and how the Fed will respond. And I think markets are trying to kind of second guess and, in a way, kind of stay ahead of that. All I can tell you is that if you look at just the 10-year yields, down about 100 bips from peak from a few months ago. Mortgage rates had crossed 7%, down to about 6.3 right now. I think the uncertainty in home prices is what's pausing a lot of the buyers from actually entering the market. We do believe that the market cannot stay frozen forever. As I mentioned, we are seeing green shoots in the secondary activity. I think that will pick up sooner. Hopefully by the end of this quarter, early next quarter, I think that should start picking up. And potentially as the indication from Fed comes in on peaking, we will see a little bit more, advance action on the interest rates that will lead to an advance action on the potentially a follow through on the volumes. Having said that, I think I also want to call out that that's less than 10% of our revenue. Rest of the revenue continues to do really well in direct. We did see a very large deal win quarter, second highest on record, 5 large deals on record again, largest deal over 100 million. BFSI continues to be a large portion of DCV wins as well as pipeline. Pipeline is up 6% sequentially and 27% on a year-over-year basis, despite the record conversion. So I think for us, since we can't control the macro, we're controlling what we're calling the micro, which is account by account, vertical by vertical, continuing to find deals, convert deals to TCV, and convert TCV to revenue.
Okay, all right. So the disappointing part was on the revenues front, but as you said, deal wins are continuing, which is good news. Manish, let's get you in. Are you experiencing any pricing pressure on these deal wins that you're going about? And the other disappointment was the rupee was weak, but your margins stayed flattish. Why is that?
So taking the second question first, Nigel, we have a hedge policy which is to give us visibility of currency, and we typically cover our currency for the next 4 quarters. 2 quarters back, dollars strengthened at a fast clip, and our hedges could not keep the pace up with it. And it typically takes 2 to 3 quarters for us to consume the hedge that we have already taken. So while the spot rate in the market is at 82.73, we are hedged at a lower number, so we are not getting the full benefit of rupee depreciation in the P&L. It should start flowing in as we consume the hedges that has already been taken in a quarter or 1.5 quarters. Coming to the first point, this was a quarter where we had significant improvement in a lot of operating metric. And, as the pressure adoption started, as we improved our utilization, and as we have seen increase in our offshore revenues, those are all tailwinds to the margin, a large part of which got kind of eaten away by a sudden drop in the revenues in the mortgage business. As we get stability in that, and as the future growth in revenue starts coming in, we should start seeing an expansion in the reported margins as well.
I think on the specific question on the pricing, Nigel, so far in our chosen areas where we are seeing demand, like cloud adoption, data modernization, data engineering, cybersecurity, contact center modernization, and customer experience transformation, we are not really seeing any pricing pressure on those segments yet. There's definitely going to be pricing pressure in the segment of the business where it's more run the business oriented, unless you club it with change the business and transformation as well. But so far, even as of the current quarter, we're actually seeing a very decent pricing environment for transformation services.
Okay, all right, Nitin, as well as Manish, we're going to thank you on that note. Thanks very much for joining in and speaking with us. So that is the word coming in from Mphasis, talking about their Q3 numbers. We need to take a short break, but before we do that, here is an important piece of information for our viewers. Do not miss out on the top 19 stocks for 2023. Subscribe to Money Control Pro to get the full list.